Team take profits on the move, the movement is real. 50 pips a day, watch the money drip. Pips pay my bills, pips pay my bills, pips pay my bills, pips pay my bills. 50 pips a day, watch the money drip. 50 pips a day, watch the money drip. Pips pay my bills, pips pay my bills, pips pay my bills, pips pay my bills.
Good afternoon, everybody. This is Optionist Prime with the Profits Mastermind Group, coming at you with a special Halloween edition of Forex Basics. Okay, I am your host tonight, and this is Forex Basics presented by New Investments. Okay, table of contents. We're going to go to Forex Basics first. Okay, what is Forex? Forex is often abbreviated FX. Is an acronym short for foreign exchange, and is by far the largest financial market in the entire world. The Forex market sees roughly $5 trillion of trading volume on a daily basis. Compare this to the stock market, which sees roughly $20 billion of trade volume in a given day. Forex is the trading or exchanging of different countries' currencies. You will also commonly see various currencies exchanged for commodities or cryptocurrencies, and these exchanges are also included under the umbrella of the foreign exchange markets. Okay, who trades Forex? Individuals, corporations. Corporations will be like Walmart, Apple, things like that. Banks. Yeah, big banks and institutional investors are the ones who really control the market. Okay, guys. Governments. Unfortunately, everybody in the world really bases their currency off of the U.S. dollar. It's weird. It is a petrodollar. There are a lot of countries who want to go back to the gold standard, but, Gaddafi figured that out. You have retail traders, okay? In the past, the Forex markets weren't very accessible for average individual traders. However, the world is changing, and it's changing fast. Globalization, technology advancements, economic and financial fundamental changes in society, and an overall shift in the way people are living their lives have opened up the access to increased the popularity of retail trading. Okay, and you have your different currency abbreviations, which gold, it's AU is really gold, but since it's a gold index, the X is for index, so it's AU, it's XAU, USD is what we trade against the US dollar. Then they'll also have XAU, EUR for euro, and so on. Okay. And then they'll have pairs, right? Currency pairing. Okay, we're gonna go back up here. Okay. Say we had USD, EUR. That means you think the US dollar is going to become stronger than the euro, okay? And then if it was EUR, USD, it would be vice versa, okay? The pairs I like that I've started watching are the Japanese pairs, okay? The Japanese and also the Australian dollar. Those are pretty neat to me so far, simply because, which I'll get to it later, there are different trading sessions throughout the day, okay? And at different times, since it's a 24-hour cycle for the world currency, Here are the majors. EUR USD, GBP USD, AUD USD, New Zealand. AUD, okay, let me go through them. The Euro, British Pound, Australian Dollar, New Zealand Kiwi, okay. The CHF is the Swiss franc, JPY is the Japanese yen, and the CAD is the Canadian dollar. Now, like I said earlier, all currencies base themselves off of the US dollar. Weird. But anyway. Then they have minors. In addition to the majors, there is another slightly larger group of currency pairs that make up an additional 15% of all trading volume in the Forex market, right? And those are referred to as minors. Then you have your exotics, your Egyptian pound, your Samoan talah, Iraqi dinar, Turkish lira, Afghanistan, Afghani. Now I'm going to stop here. Back in 2006, 2007, everybody was investing in the Iraqi dinar. Later, I will do another video on the Iraqi dinar, okay? So, moving forward, okay, you have your pips, okay? You have pips. Let's go to an actual currency pair here. Okay, here's a 30-minute chart on Australian dollar and the Canadian dollar, okay? See these numbers over here? These last two numbers would be considered pips, right? So, that is a pip, or a movement in price action, okay? So, then a spread, okay? A spread. Pretty much, when you buy an asset, there has to be someone on the other end who is willing to sell you that asset. Likewise, when you sell an asset, there has to be someone on the other end willing to purchase that asset from you. The lowest price that a seller will be given asset to you is referred to as the ask price. The highest price that a buyer will purchase a given asset from you is referred to as the bid price. The spread is the difference between the bid and ask prices at any given time. When you enter a trade, you will have to pay this difference to your brokerage, which means you will always start your trade off in the negative. So, okay, let's go back here. Yeah. Okay. Let's say the price is right here at 0.90149. Okay. If you're buying, okay, which you think it's going to go bullish or go up, that means the brokerage will probably start you off down here. So between here and here, whatever those pips are is called your spread, right? And then vice versa. And that, it changes with different brokerages, maybe different apps or whatever. But I use MetaTrader 4, and I have Hugo's Way, that's foreign exchange brokerage. I can trade major currencies, cryptocurrencies, some stocks, some futures, oil and gas, gold, so whenever Bitcoin goes to the top, guess what? I'm going to be riding along with it, okay? And I want y'all to come with us. Buying and selling, you may hear the terminology long and short used in trading when discussing trade positions. The term long means that you are in a buy position on a certain currency pair, and the short means that you are in a sell position on a certain currency pair, okay? Market conditions. Like I talked about earlier, bullish and bearish. If you don't know what bullish and bearish is, please ask. But, there is volatility. In reference to describing how much price is moving, the term volatility is used. A highly volatile market would consist of sharp, fast changes in the exchange rate for a currency pair. Likewise, in a market with low volatility, we would expect the price consolidating and not changing very much. So, whenever you see like sharp spikes up or sharp spikes down, that's called volatility. You kind of want that, especially if you want to make some money. And the enemy of volatility is liquidity. Liquidity is simply a fancy term for the amount of trade volume in a given market at a given time. Markets that have more liquidity have more participants and therefore more orders being placed in either direction. This means that volatility will be lower because having many buyers and sellers pushing back price back and forth eliminates the ability for price to rise or fall too fast and hard at any given time. An example of a currency pair with a lot of liquidity is EUR-USD. And I'm going to tell you guys, this is the most manipulated currency by big banks, okay? So I haven't looked into trading them yet. Right now I'm on the JPY and the AUD. Interested in those, maybe later I'll look into it, but I've always been told beginner traders do not mess with this currency. Do not. Okay. Trade positions. Okay. there are lot sizes, okay? You can have a lot size from a penny, 2 pennies, 5 pennies, 10, 10 cents, 25, whatever lot size that you want, okay? Lot size is used to describe as how much of an asset you are trading at any given time. They've broken down things, okay? Standard lot, okay, is $1, okay? It's 100,000 units of currency. In general, each pip gained or lost when a trading standard is equivalent to $10. So if you have a $1 lot size, okay, and it goes up, taking into consideration your spread, after your spread, pay your brokerage, each pip is $10, okay? Now your mini lot is 0.1. That's 10 cents, guys, okay? Then for each time it goes up a pip after your spread is $1. So, you know, if you have a 10-cent spread, okay, and you go up 40 pips, that's $40, okay? If you have a 20 cents lot size, that means that'll be doubled. That'll be 80, you know? And then you have your micro lots, which is 1 penny, 1,000 units of currency. In general, each pip gained or lost when trading a micro lot is equivalent to 10 cents. So, if you have a penny out there, after your spread, each pip is worth 10 cents, okay? And it says there will be instances where the financial gain or loss for a given pip isn't exactly that amount, but this information is a good rule of thumb to consider, to remember, and will be applicable to most currency pairings that you'll be working with. You should now have a mental note that there are 2 significant factors that determine the financial outcome of any trade that you take: your lot size and the amount of pips that price moves for or against you, okay? Now, you know, if you are a new trader, okay, I would recommend, you know, various, 1 penny lot sizes, okay? Just keep compounding your account with 1 penny lot sizes, you know? If you're confident in your charts and the direction for or against you that the market is going to go, you know, just compound your account, guys. You don't have to have, you know, large lot sizes and things like that. Start small, just build it up. Consistency is key, okay? Here in the U.S., you won't see 1,000 leverage. Let's talk about leverage, yeah. Okay, leverage is simply the amount that you are borrowing from your broker to participate in the financial markets. This is an important aspect of trading because price typically moves in very small increments. We're talking fractions of pennies, guys. Therefore, in order to make substantial money by exchanging currencies, you need to be trading a very large volume. Retail traders need leverage to trade in the foreign currency exchange markets because it allows them to be able to trade a large enough volume of currency to make substantial returns while only having a relatively small amount of capital, okay? So, if you have a 1 in 50 leverage, that means your broker allows you to borrow and trade 50 units of currency in the market for every 1 unit of currency that you have in your trade account, okay? If you want to know a little bit more about leverage, you can, find out with your brokerage. Different brokerages have different leverages and different specifications, okay? Market overview. The foreign exchange market is comprised of many different participants. The major banks are at the very top and control most of the trade volume. These major banks trade currency directly amongst one another via 2 special electronic networks at special pricing that aren't available to the public, aka retail traders. Retail traders trade the foreign exchange markets through various trading platforms accessible via their computers, smartphones, or tablets. These trading platforms are connected to retail ECNs, which are otherwise known as brokers, okay? So let me pull up mine real quick. I use MetaTrader 4 as my platform, okay? That's MetaTrader 4. That's my platform, okay? There we go, see? And the brokerage that handles my currency exchange is Hugo's Way, okay? So the market hours are a lot different, okay? I live in Texas, and the Forex market opens at 4 p.m. Central Standard Time, which is my time, right? It opens today in about an hour and 20 minutes, and it closes Friday at 4 p.m. So, trade sessions, okay, they have London at 2 a.m. Central Standard Time, U.S. at 7 a.m. Central Standard Time, Australia, which is 3 p.m. Central Standard Time, and then Tokyo, 5 p.m. Central Standard Time. Right whenever I get off of work, guys, these two are happening, okay? Those two are happening. So, if I can mark up my charts, catch a trade on one of these guys right before bed, I'm a happy camper, okay? Your goal, too, as a trader, is to successfully capitalize on price fluctuation, which means you are seeking at least some level of price volatility. During the hours of 7 a.m. and 11 a.m. Central Standard Time, for example, both the U.S. and European sessions are active. This means that all of the banks, corporations, institutions, ECN brokers, retail traders, etc., of these two powerhouse economies are carrying out business, conducting currency exchanges, and reacting to fundamental factors that determine price valuation. This activity breeds significant opportunity to capitalize on a price movement. In contrast, the Asian and Australian sessions typically give rise to lower volatility, and so you may see overall price consolidation across all major financial instruments during these hours, especially relative to the sharp, substantial trends that often develop in the European and U.S. session. They're closed on that, holidays and things like that. So, trading basics. There are two ways that you can make money trading. Buying, you believe the exchange rate for a certain currency pair is going to rise, so you go long on that pair, okay? Selling, you believe that the exchange rate for a certain currency pair is going to fall, so you go short on that position, right? Okay. Brokers and trading platforms. I just showed you, I have MetaTrader 4 on my phone. That's just what I use to conduct my trades, make my executions, put my stop loss, take profits, things like that. The broker is the one who handles the money, the money transactions. You have to load money on there. You do your trading, and then you can withdraw. Spreads is the difference in the price you want to trade and the price that someone is willing to trade with you. So your broker is the one who dictates your spreads. Commissions, the small cost associated with taking your trade, paid to your broker. Each broker will charge different commission fees, okay? And then you have your trading speeds, which is like your 1 minute, 5 minute if you want to scalp, if you want to day trade, if you want to position trade, which is long, or also called swing trading, you can. Asset options, you can do regular Forex pairs like USD, EUR, some cryptocurrency like I told you, some offer stocks and indices, commodities and exotics, and then the leverage. I think the most leverage you can get in the United States is 1 in 500. I have a 1 in 200 leverage, so that's where I fall on that. Then you have your withdrawal and deposit options, and then you have your regulations. Some states don't let you trade cryptocurrency, but as long as you're in the U.S., you have a lot of regulations on what brokerage you can use. Excuse me. And you have your account set up. You always want to begin with a demo account, back test yourself for a little bit, and once you start becoming successful and having profits with a demo account, then start slow on a live account. Some brokers let you deposit $10, some 50, some 100. So always start low. Okay. You have your chart types. Okay. You have your line chart, which is basic, and you have your lines. Okay. Just shows price over time. I don't like. It's just a basic. Okay, I'm gonna see. Really glance at it. You have your bar chart. I haven't really got into those, but some people like those. It's almost like candlesticks, but it flip-flops. Closes, open, close. So you have your candlesticks. Haha. That's where we're at. Okay. This is the most popular and utilized chart. Okay. If you can't read candlesticks, you can get with any of us. We can show you. Okay. I like the Heikinashi. The Heikinashi shows price action a lot better, guys. Sometimes you can scalp. All last week, I was scalping gold. I rode that boy up. I rode that boy down. But in order for me to do that, I had to do a chart, right? And here's my gold chart right here. You know, all last week, you know, I rode it up, down, up, down, up, down. Okay, so I think it's going to go up today when the market opens. So we'll see. Day trading. Day trading would be buy today, sell today, or sell today, buy today. All in the same day. Scalping is considered day trading. You know, the market moves fast, things like that. They usually trade off to 15-minute, 1-hour time frames. Swing trading would be like buy today, sell tomorrow, or take a position, like a long position. You want to buy today, and over the next 4 months, it'll go up. That will be swing trading. Okay. Why do you want to become a trader? Think about it. Okay. For me, I want my time freedom back. Okay. I want to be able to hop on a couple trades a day, make enough to take care of my family, and have that time again for my family. Okay. Family is important, guys. You know, if you can figure out a way, uh, you know, to learn Forex and even have this to supplement your income and add extra income. Some people are successful enough to replace their job, replace their normal 9 to 5 by trading Forex, okay? Um, you know, some people want money from becoming trading. Some people want time freedom. Uh, ego. I mean, if you become an amazing trader, own it, you know? Make your money. Stack them trips, you know? Some people want the legacy, you know? But I would definitely recommend, okay, if you were already a Forex trader and you were bringing in pretty decent profits, don't forget to pay yourself, put it away in dividend stocks. If you want to know how to do that, get with me. We can help you with the Profits Mastermind Group, show you how to invest in your future and know where you'll be for your family and future generations to come. This is Optionist Prime, going out.